Nirmal Jain, Chairman at IIFL, joins in to talk about his thoughts on the markets. Nirmal, hi, afternoon. The April series has been pretty lackluster, so to speak, for the markets in terms of returns as well as flows and participation. How do you rate the series, and what can one expect from the May series?
Yeah, it's true that April series has been a bit of disappointment, and in fact markets had a steady flow of foreign capital FI money in the month of January and February, when in these 2 months we got almost about $8 billion, and then in the month of March the net inflows around $1.5 billion. So together in first 3 months we got about $9 billion of FI money. But in the month of April, in fact, there has been marginal negative or marginal outflow, and there has not been any inflow of FI money. Primarily, the sentiment was a bit disappointed and negatively impacted by the budget and GAR provisions in particular. So in the month of March, because the new tax laws will be applicable from 1st April, so maybe most of the foreign investors were expecting that by 31st March government will clarify that these may not be applicable, or these will not impact FI money or money that is coming through Mauritius or through P-note structure. But that did not happen, and also the global cues, particularly from the Europe, have not been very supportive. So that, coupled with some more negative news, have impacted the sentiment in the month of April. I think, and the corporate earnings also have not been very encouraging. In fact, quite a few results like Infosys or a few more have been a bit disappointing. The guidance of Wipro also has not been very encouraging. So market sentiment is a bit subdued at this point in time, and I think maybe month of April will remain like this, and the month of May will depend on many more and many other things.
There are rumors that government may now extend the deadline for promoter shareholding. How do you see this move impacting candidates or some of those MNC names which are ripe for delisting?
I think if the stock has become fairly liquid and significant part of holding goes in promoter or promoter group, then I think delisting is in a way a good route, because it allows minority shareholders to exit at a fairly good price, and also the company which does not have adequate public shareholding should better be privately held. So in a way the guidelines have been prudent in terms of the minimum public shareholding, and the entire the takeover, delisting, and promoter the minimum public holding, they should all be implemented together. I mean, there can be some extension, but I think over a period of time this is the right approach, because if the company is listed on national stock exchanges, should have adequate liquidity. Otherwise there's no point in having illiquid stocks, because they cause more volatility, and that doesn't benefit anybody.
Nirmal, hi, morning. So do you believe that GAR scare is over for now, or do you believe incidences like the S&P outlook issue will take a toll on the markets going forward?
I think S&P outlook change has been should be a wake-up call for the government, because fiscal policy, public finances have been going out of control. But more worrisome thing is that our balance of payment, which is at 4% at GDP, which is the deficit at 4% of GDP is very high. Current account deficit, which is being funded by capital inflows and NRI remittances, which is not a very healthy situation, which means that our rupee can be continuously under threat and can weaken further, which will in turn dent sentiment of FI investors. So I think if the government is not able to put finances on one hand fiscal deficit, and also address the issues of current account deficit, then in 6 to 9 months there is a possibility of downgrade, which will not be very good, because as of now our rating is one notch above junk, and if it is downgraded to junk, then many large institutional investors will not invest, and that will also impact the cost of foreign borrowing for corporates. They go out and borrow in international market. So I think government should take the signal and try and make sure that next 6 to 9 months or in this year things are prudent measures are taken, so that fiscal and current account deficit both are brought under control.
So Nirmal, time to talk stocks and sectors. Where are you advising your clients to put money?
See, given that rupee can depreciate, and given that US is not doing that badly. So IT is one sector, but of course one has to be selective. Secondly, pharma sector also looks good because Indian companies have long-term competitive advantage. So this is one sector where you can see sustained growth in high-quality companies. Then FMCG sector again is richly valued, but consumption theme continues in India, and therefore some of the companies, probably one should continue to hold on to. And banking, one should, restrict to private sector banks, and they're also the leading ones. I think they should do well as interest rates start coming down. So I think these are the sectors, which that we're recommending to our clients to keep their equity investment in.
Nirmal, so which are the sectors that you are not comfortable with at the current juncture?
We continue to be bearish on sectors like infrastructure, capital goods, and all these where the debt levels are high and policy paralysis, or things are not moving at ground level. So sectors like power sector or even telecom for that matter. So these sectors we continue to be bearish on. Real estate, capital goods, infra, all these.
Nirmal, you mentioned that you like IT, so let's revisit why do you like IT, because if I look at the management commentary from TCS or from Infosys and for that matter from Wipro, the outlook is not all that strong. In fact, most of the IT companies have gone on record and they've admitted that in the near term the environment is tough.
I think telecom, other than Bharti, there's no other stock where we have any positive view. And in IT also, maybe TCS, HCL in large cap and some of the small cap companies, they look good for investment.